Welcome to the Capital News. I'm your host, Alex Corritis. Today is December 19th, 2019. Thank you so much for joining me. Today we will be continuing our discussion with Deutsche Bank's list of market risks for 2020. They provided 20 of them for the upcoming new year. We will make our way through that list. But first, I do want to provide some other updates on some things that we have been talking about, and obviously some of the politics taking place today as well. With the articles of impeachment, it looks now as if Speaker of the House Nancy Pelosi is using the articles of impeachment as a bargaining chip, as leverage to make sure, as much as she can, quote unquote, to ensure that there is a fair trial in the United States Senate. Everybody has problems with this. Some people say it's okay. It's back and forth. This is politics. This is politics. It doesn't justify it. It doesn't justify it at all. But here's where we are. Because for the past couple months during this impeachment process to date, you have had the Republicans complaining, slamming the table, screaming at the top of their lungs about process. Not about the facts. We went through this yesterday. We went through this in many other previous podcasts. Go check those out. Even after listening to my podcast yesterday, I was like, oh my goodness, I left so many things out that I should have written down beforehand just to make sure that they were spoken about once again, that they were discussed once again on yesterday's podcast when it comes to the facts that we know. But you know what? We've already had those previous discussions. I'm not going to do that here today. As a refresher, as we make our way through this impeachment process, I will probably do so again. But there is just so much to cover. I mean, I could easily fill an hour, 2 hours, just talking about the facts and connecting the dots. Not about the process, the facts. So you've had Republicans screaming about process for 2 months, whatever it's been. And now this thing came to its conclusion. When it comes to the impeachment vote, again, Donald Trump was impeached yesterday, and now it moves to the Senate. And now you have the Democrats concerned with the process. The process, and we already know that Senate Majority Leader Mitch McConnell of Kentucky has already publicly stated that he is working hand in glove with the White House to pretty much make sure the trial in the Senate proceeds in a manner in which the White House wants it to proceed. So this is a juror, because the members of the Senate are the jury, working with the defendant, the President of the United States and his counsel. I don't care if the Democrats did this 20 years ago with Bill Clinton. That argument doesn't jive with me. You do not point to poor behavior to justify more poor behavior. Didn't your mother teach you this when you were a child? Have you forgotten? Do you not care? Just doesn't make any sense. So now you have Republicans saying, how the tables have turned. How do you like it? That's the best we can do? When is this game going to stop? It's not. It's not, because we have no leadership. We don't have leadership on the Democrat side. We don't have leadership in the House. We don't have leadership on the Republican side. We don't have leadership in the Senate. We don't have leadership in the White House. There is none. There is finger pointing. There is yelling. There is screaming. There is politics. There is fanning the flames. There is pouring gasoline on a huge fire. Nobody's putting it out. Nobody cares to put it out. You did this to us. We're going to do that to you. That's the best we can do. It's a true shame. All of these people should be impeached. All of them should be kicked out. Right, left, black, white, gay, straight, East Coast, West Coast. I don't care where they're from, who they are. Get rid of all of them. Get rid of all of them. Because this is evidently the best we can do. So just get rid of them. We would be better off with no government, as opposed to all of these monkeys and lunatics running loose and managing the asylum. I mean, you have to think and ponder this seriously. These are grown adults. Oh, well, you screwed us over with the process. Now we're in charge of the process. Now we're going to screw you over. That's the best we can do. Don't you want a fair trial? And furthermore, shouldn't the Republicans welcome and want a fair and open trial? Aren't they so secure in their position and in their belief that Donald Trump did nothing wrong? That he's an innocent man? Well, then why wouldn't they want an open and complete and fair trial that just knocks everything and blows everything out of the water? That he's perfectly fine. The phone call was perfect. Mike Pence comes and testifies. Rick Perry, John Bolton, Mick Mulvaney, maybe even Rudy Giuliani, maybe even the president himself. All of the president's men. The inner circle of the inner circle. And then you say, okay, well, here are the facts, here are the discussions, here are the call transcripts, here are the meeting minutes. Here's all of this evidence showing a fact pattern that we were already investigating this for years. We were already concerned about these issues that were brought up on this phone call for years. We have seen none of this. So why wouldn't the Republicans welcome a trial like that, where you do have these fact witnesses? Because remember, it was the Republicans complaining that there were no first-hand fact witnesses. Remember, that's the lingo. First-hand fact witnesses. Everything else has just been hearsay. That's not really true, but that's their argument. It is to a degree, but not in its entirety. The witnesses who have come forward have provided facts. They have shown a fact pattern that can allow a reasonable person to presume what was going on. That's the justice system. That's how it works. Because unless you have the criminal or the defendant on tape, on audio, signed, sealed, delivered confession, you have to make common sense connections. That's how it works. It's how it works. You do not check your common sense at the door. Because if that was the case, there'd be nobody in prison unless there was somebody with a very, very guilty conscience and they had to confess. And they showed all of the evidence proving that they were in fact guilty. Donald Trump does not have a guilty conscience. So this is going to continue to be politics. I don't know how long Nancy Pelosi is going to hold out. I don't know what she deems fair. I mean, Donald Trump was impeached. You got to move these articles to the Senate. That is the process. You cannot hold this up indefinitely, Nancy. Make a move. I know we don't like it. I don't like this whole process either. I don't like the fact that Donald Trump did this. Put the country in this position. I don't like a number of policies, but that becomes a question of policy. That's for an election. This, he crossed the line. He needs to be held to account. And again, you have to ask yourself, will he do this again? Especially if he is acquitted. I answer that, yes, he will do something like this again if he's acquitted. He will feel emboldened if he is acquitted. He's already stated as much. He already believes that Article 2 of the Constitution gives him ultimate authority, absolute authority. That's ridiculous. But I digress. Politics. There was a Democratic debate this evening. I was working on something else. I did not watch it. So my IQ did not decrease this evening, thank goodness. But at least there are fewer candidates on the stage. I think there's about 6 or 7 of them that made the stage. PBS hosted it. I think it was also on CNN. I'm sure it was the same song and dance, although now with a less crowded field, I'm sure they were able to get a little deeper into their policies, maybe actually go after a candidate a little bit more aggressively because they had the time to do so. We're only a couple months away from the first caucus votes in Iowa, and we have the impeachment trial coming up, and we still have senators in the race, so they have to be there. They have to be in Washington, D.C. So this is going to get interesting as to see these candidates who are senators off of the campaign trail because they have to sit as jurors in this impeachment trial. And nobody knows how long that will take, if it's going to be something that's quick, that's brushed over, and he's quickly acquitted, or if this is actually going to be a trial and there are real witnesses that come forward and testify. Your guess is as good as mine. Time will tell. But there are a lot of politics at play, and we're just going to have to wait and see how this transpires. And don't forget that you still have Michael Bloomberg in the race, who is just throwing money all over the place to get as much name recognition out there. He really wants to set himself up for Super Tuesday to get as many votes as possible that he can take to the Democratic convention later next year. And who knows what's going to happen. That's just like an eternity away. We can speculate as much as we want, but I just wanted to let you know that there was a Democratic Party debate this evening. I did not watch it, but I am sure it was very much same old, same old. When it starts to whittle down a little bit more, of course, I'm going to start paying closer attention to really start to handicap who has a shot of getting the nomination, and do any of these crazed people, especially the socialists, do they have any chance beating Donald J. Trump? I don't think so. I don't think so. If Donald Trump is acquitted, I still believe that he will win in 2020, and I take no pleasure in saying that. Market performance. Dow Jones Industrial Average, the S&P 500 were both up about 0.3%. The NASDAQ 100 gained 0.6%, making new all-time highs, but that is basically a daily theme, new all-time highs all the time. We have WTI crude oil at $61 a barrel. We have Brent, the international metric, at $66.75. So we're nearing the $67 mark. I mean, you got an increase in costs. We talk about the transports here all the time. The cash freight index report was released. We're going to have to talk about that either on tomorrow's podcast or maybe on the week ahead segment, but that will be discussed here shortly. So you have the cost, the input cost here, fuel, going up, when margins are already starting to get squeezed, when you're already starting to also see a decrease in demand, which we've been experiencing for quite a while. Not good, folks. You get more margin squeeze, you get more people who have their hours cut back, and then it's just a matter of time before they start getting laid off. This is the business cycle. This is predictable. We have gold trading at $1,476 an ounce, so quite the stealth. I don't really want to call it a rally, but a little mini rally, because we were flirting with $1,450 not too long ago, and now we're at $1,476 an ounce. Silver is hovering at $17, and it is at $17.07 an ounce. I still believe you have to be diversified and do so by having some precious metals. But like I always say, do your homework and do what's best for you and your risk tolerance. So getting to our market risks. Again, this is from Deutsche Bank. I believe we got through, maybe number 10, 9 or 10 of these, so we're halfway through. We'll see if we can maybe get through the rest of them today or tomorrow. I know we did discuss point number 9, MMT, modern monetary theory style fiscal expansion, boosts growth significantly in the U.S. and or Europe. We said this is a joke. This is just going to unleash inflation. If it happens, if anybody brings up modern monetary theory and they're supporters of it, call them for what they are. They're idiots and they don't know what they're talking about, and tell them to tune into the Capital News for a thorough education. Number 10 was U.S. government debt levels begin to matter for long rates. And we said, well, my goodness, what are you saying here, Deutsche Bank, that markets are actually going to price something? They're going to price something accurately? There's going to be some true price discovery? You mean $23 trillion $23 trillion in debt it's not sustainable? Is that what you're saying here, Deutsche Bank? My goodness, give them the Einstein Award for the day. So that's what's going to happen. Markets are going to have their way with Uncle Sam because he's spending like a drunken sailor, and there's no end in sight. And in fact, it's getting worse. And we are not in a recession. So if we're already on track to once again hit a $1 trillion deficit, because last year, this fiscal year, we hit a $1 trillion budget deficit. We're already on track for fiscal year 2020 to hit another $1 trillion. What happens if and when we go into recession? Because we will. Because they have not been outlawed. And in fact, recessions are a healthy part of the process to get rid of malinvestment. That's how it's supposed to work. You're going to have 1.5 trillion, maybe even 2, depending on the severity of the recession. So, of course, markets are going to say, you got all that debt? I'm never going to get paid back. So if I'm going to be, compensated for the risk, You have to give me a higher yield, Uncle Sam, which just makes Uncle Sam's problem that much worse because now he owes that much more in interest. You see why this is a problem? You see why it's so imperative to get your fiscal house in order? Where are my fiscal conservatives? They are nowhere to be seen. Maybe one or two. That's about it. They are nowhere to be seen. They don't object to Donald Trump signing off on this. They don't object to him congratulating himself and the Democrats earlier this year, basically saying, okay, we staved off a shutdown, blah, 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 blah. Who cares if we're going to have trillion-dollar deficits? Who cares? Maybe he doesn't care because he's 70-something years old. Wonder how the younger generations feel who are going to have to pay for it. So that's quite possible. U.S. government debt levels begin to matter for long rates. They're going to matter across the entire the entire curve as far as I'm concerned. Number 11, you have a mismatch between demand and supply in T-bills. These are the shorter end of the curve. And you have another repo rate spike. Well, this is basically no question. There's no ifs, ands, or buts about it. This isn't just a risk for 2020. This is a risk for today, for the remainder of the year. This has been a risk to the market since September when the Federal Reserve came out and said, oh, this is just a one-off. And of course, it's temporary, but it's been temporary for the past 3 going on 4 months. Is it really temporary, or is it maybe a little bit more quasi-permanent? We're going to see if and when this thing unravels. We'll see if they stop interfering in the repo market. I highly doubt they're going to stop anytime soon. We already know that they're going to print $500 billion between now and the end of the year just to keep this thing alive. But supposedly this is the greatest stock market ever. Supposedly this is the greatest U.S. economy ever. So why do you need emergency monetary policy? You can answer that question, and you can do so logically. Write to me and educate me. Okay? Please do so. Because it makes no sense whatsoever. If everything's fine and dandy, then the marathon runner, the sprinter, doesn't need crutches. Makes no sense. Then you have point number 12. The Fed is reluctant to cut rates in an election year. You mean questioning their independence? And is Deutsche Bank admitting to a truth that we all know here at the Capital News? That these markets are addicted to central bank liquidity. I mean, that's what they're basically saying. The Fed is reluctant to cut rates in an election year. That's a risk. Why is that a risk? Why would that be a risk for them to cut rates? Or to not cut rates, rather, because it's an election year. Are you saying that the underlying fundamental economic data is not supportive of these market valuations and these price levels? Is that what you're saying, Deutsche Bank? Are you making sense again? Do I have to give you 2 Einstein Awards today? Because I think that's what they're saying, folks. They're telling us what we already know here at the Capital News. And most people are just walking around blindly. Oh, yeah, my 401k's up. Everything's fine. At what cost? At what cost? You know, it would be beautiful if you could just account for revenues, but you wouldn't have to pay any of your vendors. You don't have to pay your employees. You don't got to pay any taxes. Nothing. Just take in all the revenue and say, honey, we're rich. But when you have to do real accounting, you have to take into account the revenues and all of the costs that are associated with it to get a net position. How are all of these stock markets, not just in the United States, but around the world, how do they continue to go up with all of this deteriorating economic data? Central bank liquidity and fiscal stimulus, more debt, more artificial measures. That's the cost. And wait until you see how expensive that is. And none of us are smart enough to time it. So you better be careful, which is why I tell you to stay diversified and stay vigilant, because this thing will collapse a hell of a lot quicker than the rate at which it increased. That's how it always happens. You can wipe out 6 months of gains in a month. In a month. You take the escalator up, you take the stairs up, you take the elevator down. That's the saying. Get used to it. Remember it. Number 13, credit conditions tighten with more differentiation between CCC and BBB corporate debt. And I'm going to go off on number 14 as well because they're similar. Point number 14 is credit conditions tighten with more differentiation between CCC and BBB consumer debt. So we're talking about 2 things here, corporate debt and consumer debt for junk bond status and bond status that is just above junk. Okay, so triple C and triple B, when these yields, when the spread between these yields widen, you have a liquidity problem. So that's what was witnessed last year. You didn't have too much of that in 2019 because of all of the liquidity that was thrown at the market and because of all of the jawboning that took place from central banks and because of the interest rate cuts that took place around the world and here in the United States. So they are concerned, Deutsche Bank is, and rightly so. These were concerns that Deutsche Bank voiced for 2019 market risks as well. And this just goes to show you how big of a concern this is, because this is not played out in 2019 like many people would have thought that it would have. And that is because we have had major interference in market manipulation, and all of this funny money that's been printing is continuing to keep these zombie corporations alive. They have junk bond status. That's what they are. They're junk bonds, and they're junk for a reason. They're zombie companies for a reason. But if you have artificial measures that can continue to kick the can down the road, this is what you get. And we have a mountain of debt that is coming due across the entire spectrum. It was starting to come due in 2018, 2019. This is going to continue for the next few years. I think well into 2022, maybe 2023. You just have a mountain of debt that is coming due. That is going to sap growth like you cannot believe, because that's exactly what debt is. It brings future consumption forward. It brings it to today, and the piper always gets paid. And there are costs associated with it. Number 15, fallen angels. More companies falling into triple B and out of triple B into high yield. This is a continuation of points 13 and 14. This is, okay, all of these rating agencies, now you got to step up to the plate, pal, because look, you screwed everybody over 10 years ago during the great financial crisis and before that because you stamped all of these subprime mortgages as AAA. AAA. Can't get any better than that. And then what happened? The global financial markets collapsed because of these products and their derivatives, which were stamped AAA. Okay? So now, 10 years later, and throughout the process, through this past decade, you have ratings agencies are basically saying, all right, we cannot stamp all of this stuff that you guys are now putting out there. We can't stamp it AAA because, we got shellacked last time. Our credibility's on the line here. We can't do it. But we'll try to help you out because the same firms who depend on these ratings are also paying for these ratings. Conflict of interest? Maybe? Yes. So the best we can do for you, triple B. We will say you're not junk, even though you are, wink, wink, but that's the best we can do. So triple B it is. And now you have about half the market tied up in triple B. That should sort of set off bells and whistles in your head if you're somebody who has a skeptical mind. Oh, that is triple B? That can't be. Something's not right here. And it isn't, because most of those companies should be downgraded to junk status. If you have this cascading effect, or the markets believe that there's going to be a cascading effect, which could be just as dangerous, if not more so, of companies falling from triple B status into junk status, you're going to have a big problem, because a lot of firms, a lot of mutual funds, and you have nothing but passive indexing that is taking place in these markets. That's just people throwing money into their account every month, and it's just willy-nilly going there, which is fine in some instances, but it's going to cause some problems in the future, I do believe. These mutual funds, they cannot hold them. They have to hold investment-grade bonds. They can't hold the junk. So they are, by their own rules, by their own bylaws, they are going to have to sell those bonds, which is going to cause a huge liquidity crunch. And that goes to a lot of the other points that Deutsche Bank is also noting here as well. So a lot to pay attention to on the debt front. And that's right, because that's the problem. Too much debt. Number 16, more negative yielding debt. You get the theme for 2020? More negative yielding debt sends global investors on renewed hunt for yield in U.S. credit. That's possible. That's possible, and that's probably one of the reasons why the yield spreads between junk and triple B are tight, because people around the world, they say, I don't want this junk. I don't want these negative yields. I'm going to go to the United States. At least I can get some sort of positive return, hopefully. And that's the effect that it has. It bids up the price. It lowers the yield. It tightens the spread. That's the process. Will that continue, or will there be an unwinding? Because we talked about this too. Maybe people are going to say, oh, well, the United States had a good run for the past 10 years. It looks like there might be some turning around, some bottoming out in Europe. Maybe we'll go over there in Germany. Maybe we'll go there in France. You know what? Maybe Japan's turning a corner too. Maybe they finally have everything in a row for once over the past 30 years. Maybe they finally got it right. Let's go into their markets. Who knows what type of rotation we're going to see, but 2020 is going to be a very, very interesting year. There's a lot of dynamics that are going to play out. And we still have about, I think, $11 or $12 trillion in negative yielding debt around the world, by the way. So it's still astronomical. It has come down somewhat significantly, because I think we peaked at about 16 or 17 trillion, if my memory serves me correctly. But now we're about, 11, 12 trillion. It's not getting any better. And of course, thunder thumbs here in the United States wants negative rates here. And again, if you don't understand negative rates by now and you somehow support them, you need your head examined, and write me a letter or an email or whatever, make a comment, and I will do my best to explain it to you once again. But I talk about them here all the time. This is theft. If you're fine with the government, with central banks, or with the banking system just taking more of your money, give it to me. I mean, I'll be more productive with it than they will be. So give it to me. If you don't care about your money being stolen, then just give it to me. Send me an email, and we'll make arrangements, okay? This is ridiculous. The very fact that those words came out of the president's mouth, that to me is unforgivable, because I know the detriment, I know the negative consequences that will cause to the everyday man and woman in this country. It'll ruin us. And we're already going down that path to begin with. That will be one of the final nails in the coffin, if you will. It cannot come here to the United States. And the fact that the president even thinks that is a solution and is calling for it outright, that to me is a crime in and of itself. Number 17, declining corporate profits means fewer dollars available for buybacks. So once again, it appears that Deutsche Bank is admitting here that without the Federal Reserve cutting interest rates, and without more access to debt, or the slowdown of the economy resulting in lower profits, you're not going to have as much share buybacks. So the Deutsche Bank is admitting that what is keeping this market up and is causing these all-time highs on a near daily basis is central bank liquidity and share buybacks. They sound like the Capital News. They're finally getting their act together. Those money launderers and all the other crimes that Deutsche Bank is known for committing. They at least get some things right. A broken clock is right twice a day. They know that this market has been financially engineered. No ifs, ands, or buts about it. Central bank liquidity, share buybacks. Not because of good old-fashioned growth. Not because of good old-fashioned innovation and entrepreneurship. Nope, not that. Let's just give them the easy way out. Let's just print money. Let's just print money and give it to our buddies. Not to everybody. Let's just give it to our buddies. Major corporations, governments, that's it. Everybody else, they can get screwed with the cost of living adjustments. Not that I am an advocate for giving everybody money. I'm an advocate for abolishing the Federal Reserve. Number 18, shrinking global auto industry, a risk for global markets and economy. Well, we talk about this here all the time. I have GDP models where I take into consideration the auto sector because it's just that huge. It's just that important. It's just that interconnected with so many other supply chains throughout the country and really globally. So if this is going to be a continuing theme throughout 2020, because I imagine that it will be. I mean, even if you just watch the commercials, they're like trying to give these vehicles away. I mean, it's ridiculous. And that's because they have oversupply. And now you're going to see the effects of oversupply. Lower costs, trying to get people into new cars, new trucks, and it's not going to happen. And it's not going to happen, especially at the end of a business cycle. And once people start getting squeezed and they start getting pinched and these corporations start laying people off, they're not going to go out there trying to buy new vehicles. Okay? And the market that you really have to start paying attention to, and we have been focusing on this, is in China and in India, and those numbers are terrible. And they're not too good here in the United States either, but they're still hanging on because of the amount of incentives that are being put out there trying to give these cars away. That's the only way they can get them off their lots. Not good. Number 19, house price crash in Australia, Canada, and Sweden. Again, this is fueled by what? Cheap money from all over the world. We've talked about this in depth before, and this still has not really come to fruition. There have been some significant price decreases in these locations. Obviously, it's going to be location, location, location. But I don't think we've seen the worst of it yet, because we continue to kick the can further and further down the road. If we really had free market capitalism, if we really had free market price discovery, a lot of this would have been done with. We would have been through this. Okay? I'm not saying it would be easy. It's going to be painful, but the further we kick the can down the road, the more painful it's going to be for everybody. So we would have seen a lot of these deflationary effects. We would have seen a lot of these prices coming down on a lot of assets. And of course, that would have caused a lot of turmoil, because that's the way the system operates. It's an inflation system, not a deflation system. Things always have to go up. Of course, you go shopping looking for deflation, if you will. You're looking for lower prices, but that's not how the system operates. It's always looking to increase prices and increase costs. So you have to allow all of these malinvestments to be liquidated. You have to allow these zombie companies to go out of business. You have to allow all of these home flippers and everybody's trying to make money on the real estate market, you have to allow them to restructure, go out of business, what have you. Because people can't afford to live. We did this a couple weeks ago, the 60-minute special. People with full-time jobs in Seattle choosing to live in a tent, or they have to live in a tent, or living in their vehicle because, well, I could afford rent, but then I'd be living paycheck to paycheck, and I don't want to do that, so I'm going to live in my van. This is happening all over the place. Okay? This is real. These are the consequences. And if you put the pedal to the metal with negative interest rates and further quantitative easing, well, now you're really screwing the average person. But guess who's calling for that? Your president, Donald J. Trump. Number 20, Brexit uncertainty persists. Well, we talk about this here quite a bit. There is no resolution. There is no solution to this at this moment. We did have the general election take place in the UK, a week ago on December 12th. Boris Johnson remains in power. The Conservatives scored a major victory, one of the largest victories since Margaret Thatcher was there in the 1980s, a huge blow to the Labour Party. So maybe, just maybe, the Conservative Party will fulfill the wishes and the will of the British people from their vote on the referendum in June of 2016 for Brexit. So that is the list, ladies and gentlemen. 20 market risks for 2020. And once again, conveniently, Deutsche Bank kept themselves off the list as a potential systemic risk to most definitely the European financial system, but I also believe the global financial system. They would be like another Lehman Brothers if they collapse, and I do believe their collapse is pretty much inevitable. I mean, they can spin off as many bad banks as they want to, but that ain't good, folks. That ain't good. So there will be much more to discuss. Hopefully, though, it's a little bit calmer. I mean, my goodness, we had a president impeached. We have markets at all-time highs. We have a trade deal fiasco that we still don't know the details to. Let's just take a breather. Let's hope that tomorrow is an easy day. Let's hope. Thank you so much for joining me. Please like, share, subscribe, get the word out, and leave your comments. We do love hearing from you. This is the Capital News. I am Alex Karitis. Godspeed.